This may just be the biggest lie ever told in finance. And look, there's a lot of big lies in finance. The banks lie, the politicians lie, the government agencies lie, corporations lie. Everybody's lying about what is happening in the financial world. It's all just a fugazi. But this may be the biggest lie told of our times. What is happening to inflation, the real inflation rates, the real negative interest rates are shocking. So in today's video, I want to discuss this very, very important topic with you that if you are an investor, you really need to know about. And if you are a Bitcoin holder or someone who's thinking about holding Bitcoin, then you definitely need to see this video. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you do like that topic, you do like staying up to date with what is happening in the cryptocurrency space or beyond, then a quick tap on the thumbs up button to let me and YouTube know. That would be super freaking awesome. By the way, every single week my team and I make a newsletter covering all of the latest in the cryptocurrency space, token sales, airdrops, NFTs, coin reviews, DeFi, and much, much more. Sign up for free using the link down below. Now let's go ahead and get into this topic. Inflation is here. Inflation is raging. Inflation is not transitory. I thought it was supposed to be transitory. No, inflation has been steadily rising for quite a long time. But the reality of inflation is probably a lot worse than the government is telling. I mean, hey, I know we all trust everything the government says all of the time. Why would they be lying about the inflation numbers too? Yeah, they're lying about the inflation numbers too. At least they're misleading people with some mistruths, white lies on inflation. I don't know. It's not good. Even the reality of what they're telling us is not freaking good. So here are the stated numbers. This is the CPI data for February. So it came out that consumer price inflation has reached 7.9%. Now, 7.9%, pretty crushingly bad number, to be honest, because that means that essentially every year you're losing an entire month of your economic activity to inflation. Just gone forever. That's pretty shockingly bad. To put it another way, every 9 years, the purchasing power of your money goes down by half. So if you make $100 today, put that under your bed, well, in 9 years' time, that same $100 is going to buy half as much as it does today. It's a pretty shocking devaluation. Look, this is just the US where things are better, right? If you look across the world, we see some economies with inflation rates 20, 30, 40, 50%. Really shockingly bad stuff. People's wealth is cratering right in front of their eyes. And at 7.9% for the world's biggest economy, you can kind of see it on a day-to-day basis as prices keep going up for stuff. Now here is the real kicker. That 7.9% number, probably pretty inaccurate. You see, a while ago, they decided to just change the way they calculate inflation. So it was looking bad. So they said, well, if we just, move a few things around here, it's not going to look as bad. So this kind of basket of consumer goods that they base inflation off of, well, that has been changed over time as, inflation continues to go up and all this kind of stuff. So essentially, if we were basing today's inflation rate off of the previous math that was used back in 1980, we would see that inflation's actually up around 15%. Or if you to base it off of the 1990 numbers, well, then inflation would be up around 10%. Either way, inflation is likely worse, potentially much, much worse than they are telling you because they're cooking the frickin' numbers, because of course they are. And even if they aren't cooking the numbers, 7.9% is terrible. But if they are cooking the numbers and the real number is around 15%, then it's essentially twice as bad as I just said. Your money halves every 4.5 years. So that $100 you put under your pillow, 4.5 years time from now, it's buying half as much as it does today. You're essentially losing 2 months of work every year to inflation. 2 months of your economic activity just taken away by inflation. These are devastating numbers. Now, there are some outliers when it comes to inflation, largely, things that regular people buy. Gas is up 38% in a year. It's a pretty devastating number for anybody who needs to commute. Now, of course, modern economy, the whole post-COVID world, a lot more people are staying at home, so maybe it's not going to affect people as much as it would have a couple of years ago, but still, gas is up 38%. That's pretty shocking, because even if you stay at home, well, chances are now you're getting more stuff delivered to your house. You're getting your groceries delivered. You're buying more stuff on Amazon. You're buying more stuff on eBay. All of those shipping costs go up. The cost of all the food that you buy at the store, guess what? It has to show up there on trucks. Their prices have gone up. They're going to pass those prices increases on to you. The price of everything goes up when the price of energy goes up, because transportation relies on gas. Animal products up 14%. Rent is up 17%. So the things that people buy most, gas, food, rent, all that stuff has outpaced even the official 7.9% number for inflation. Life has got a lot more expensive for a lot of people. Silver lining in this chart, though, beer is only up around 3%. Thankfully, you can drink away all of your money problems, and, beer is still affordable. So that's a good thing, I guess. But look, don't worry. There's really good news here. Really, really good news. So you don't need to worry about all those, runaway inflation numbers that I've just told you, because guess what? The Federal Reserve has just announced they're raising interest rates by 0.25%. Cool. Now that makes the negative real interest rate 7.65%. Again, according to the official numbers, it's likely much worse, and depending on what items you're looking at, it's dramatically worse, even again, according to the official numbers. Now, at 7.65%, real negative interest rates, again, crushingly bad stuff here. These are shocking numbers. If you are in fiat, you are losing. Inflation is not transitory. Inflation is here to stay. Inflation is not going anywhere. Guess what? Inflation, it's not some anomaly. It's not some bug of fiat currencies. It's a feature. Fiat currencies, by their nature, are something that governments can just print like crazy. And it's exactly what they do. Don't believe the lies of the central banks. Look at the trajectory of money over time. Here's a chart for you showing many of the world's major fiat currencies versus gold since 2000. Every single one of them down dramatically. But what about the US dollar more specifically? It is the global reserve currency, which is obviously why we have to mention the US dollar all of the time. It is the financial oil of the global markets. So how has the dollar fared over time? Well, check out this chart. It's not good. It's not good. The purchasing power of the dollar has dropped dramatically throughout its history, and it's on a pretty solid downtrend where the purchasing power of the dollar just keeps going down. Now, one of the reasons the dollar has maintained so much global prominence, obviously, is because of its status as the petrodollar. So anytime countries want to trade oil, they need to, exchange their local currency into US dollars, because that's what countries like Saudi Arabia accept for their oil. Right? This is all part of the arrangements that were made a long, long time ago with, the US saying, hey, we're going to make sure the shipping lanes stay open and that you're protected. You just got to accept US dollars as payments for oil. Saudi Arabia said yes, but there's cracks starting to appear in this arrangement, with Saudi Arabia recently coming out saying they're going to start accepting Chinese yuan for oil. India also telegraphing their interest that they would like to pay for Russian oil using Chinese yuan. This has massive repercussions for the dollar, a dollar that's already suffering from massive inflation is likely to get hit even worse as all this stuff kind of plays out. We also have the U.S. Debt currently over $30 trillion, heading towards an estimated $80 trillion by the end of this decade. What? In the famous words of Ray Dalio, cash is trash, quite simply. Now, I told you we were going to talk about Bitcoin. We're going to talk about Bitcoin now because it's very, very interesting. Because people talk about Bitcoin as an inflation hedge, but they say, "Oh, it's so volatile, it's up and down all the time. How can you possibly say it's an inflation hedge?" You can't look at the day to day, the minute to minute, the hour to hour, even the week to week or month to month for Bitcoin. Let's look at the trends over time. So, how does holding Bitcoin compare to holding cash? Remember, cash is only going down. Over the last 5 or 10 years, if you just held cash, you would be significantly out of pocket, purchasing power-wise, because all of that fiat has been so deeply devalued. Here are the numbers for Bitcoin. Bitcoin crushes inflation. Look at this chart here. Over the last 10 years, Bitcoin has put in a positive return versus dollars in all but 2 years. Yes, it has been volatile, but here is the reality. Anybody who had bought Bitcoin over the last years, they're up versus dollars. It is working as an inflation hedge. In fact, it is an inflation hedge that is in price discovery mode. That's an important thing to realize. Bitcoin has not reached its upper limits of its market cap. In fact, there's really no top for Bitcoin because there's no bottom for fiat. Bitcoin's a fixed, scarce asset. Fiat, they just keep making more and making more and making more and making more. It's a never-ending problem. They think that to fix the problem caused by money printing, they can print more money. But that doesn't fix the problem caused by money printing. It makes the problem worse. Here's another thing I want to share with you, another chart I want to share with you. So this is from the website dcabtc.com. So if you had bought $100 a week worth of Bitcoin for the last 5 years, you would be up over 700%. Yes, you would have had to sit through some pretty crazy volatility during that time, but you would have crushed inflation. All you had to do was take those dollars that would be guaranteed to be worth less today. Had you taken those dollars, put them under your bed, you would have lost, guaranteed. With your Bitcoin purchases, you'd be up over 700%. The numbers speak for themselves. Anybody not paying attention, anybody thinking that they're safe in fiat currencies, go talk to the people of Turkey, go talk to the people of Lebanon, go talk to the people of Argentina or Russia or any other country that has suffered critical fiat failure. It's all destined for the dust bin of history. Bitcoin is the future of money. That's why I buy and hold Bitcoin. The meme's true. The meme is true. Fiat just keeps buying you less and less over time. Bitcoin just keeps buying you more and more over time. If you want to increase your purchasing power over time, you buy Bitcoin, you hold Bitcoin. It's really that damn simple. Anyway, thank you for watching today's video. Me sharing my 2 Satoshis on the inflation situation. Let me know your thoughts on this down below in the comment section. Thanks so much for watching today's video, and peace out till next time.